Welcome to Tesla Daily News Podcast for Sunday, January 4th, 2026. Today, we're breaking down the biggest Tesla headlines that actually move the stock, deliveries and demand, China competition, fresh pricing signals, regulatory changes, and what all of that means for margins and the 2026 setup. Story 1. Tesla just lost the global EV sales crown to BYD, and the numbers matter. Context: Tesla's valuation has always leaned on growth, scale leadership, and the idea that it can widen its moat over time. When a competitor takes the volume title, it doesn't automatically break the business, but it does change the narrative investors trade on. Details: multiple reports citing Bloomberg and Reuters say Tesla delivered about 1.64 million vehicles in 2025, down roughly 9% year-over-year. BYD sold about 2.26 million battery electric vehicles in the same period, up around 28%. Impact: this is stock sensitive for two reasons. First, it can pressure sentiment on Tesla's dominant growth storyline, especially heading into earnings and 2026 guidance. Second, it forces investors to separate Tesla the automaker from Tesla the platform bet. If unit growth is choppy, the market will demand clearer proof in software, autonomy, energy, or cost advantage to support premium multiples. Takeaway: the headline is a psychological hit, but the investable question is forward growth and profitability. Can Tesla stabilize deliveries, protect automotive gross margin, and expand high-margin software and energy revenue streams? Story 2. The underlying reasons for the sales decline are also a warning signal. Context: several articles point to a mix of factors: rising competition, the end of certain U.S. EV tax credits, and consumer pushback related to Elon Musk's politics. Details: one report highlights that tax credit changes in late 2025 created a demand air pocket, and that competition is accelerating in both China and Europe. The common thread: Tesla's demand is no longer insulated. Impact: when demand is less predictable, Tesla tends to use price, incentives, or financing promotions to keep factories running. That can protect volume but usually pressures per vehicle profitability. This is why deliveries and pricing are tied directly to the stock. Takeaway: watch incentive intensity. If Tesla has to lean harder on discounting or subsidized financing, analysts may trim margin and earnings estimates even if deliveries recover. Story 3. Tesla Japan just launched a 0% financing campaign, and that's a real-time demand read. Context: financing promos are one of the cleanest signals of demand management. A 0% rate can pull demand forward fast, but it is not free. Someone pays for that rate. Details: a Tesla Japan release promotes a 0% special interest campaign for Model Y rear-wheel drive and Model 3 rear-wheel drive. Pricing shown includes roughly 4,317,000 yen for Model Y rear-wheel drive and roughly 4,043,000 yen for Model 3 rear-wheel drive, alongside down payment examples. Impact: for investors, the key isn't just more orders, it's the margin trade-off. If Tesla is effectively buying down interest rates, that's equivalent to a price cut over the life of the loan. The short-term benefit is higher deliveries and better factory utilization, but the risk is lower gross margin and a market expectation that incentives are becoming the norm. Takeaway: promos like this can help quarterly delivery optics, but they raise the bar for Tesla to show cost reductions, mix improvement, or software attach rates that offset incentive pressure. Story 4. China's new rule banning fully retractable door handles by 2027 could create redesign costs, and it hits Tesla's design language. Context: regulations that force hardware changes can create unplanned costs, slow refresh timelines, and complicate global part commonality. For Tesla, manufacturing simplicity is a big part of the margin story. Details: a German tech outlet reports China will prohibit purely electrically retracting door handles from 2027 for safety reasons, affecting multiple brands including Tesla. Impact: the market impact is not immediate revenue, but it can become a margin and execution issue. If Tesla must redesign door handles for China-spec vehicles, it may either split parts between regions, adding complexity, or roll a global change, requiring broader revalidation. Either path carries engineering and tooling cost, and possibly temporary production friction. Takeaway: this is a reminder that hardware minimalism still has to comply with local safety rules. Investors should watch for Tesla commentary on regulatory-driven redesigns and whether they can maintain manufacturing standardization. Story 5. Denmark's best-selling car in 2025 was the Model Y, and late-year momentum looked strong. Context: European demand is one of the cleanest indicators of Tesla's brand strength outside the US and China. Small markets don't move global totals alone, but they provide clues about product market fit and price competitiveness. Details: Danish reporting says the Tesla Model Y was Denmark's top-selling car in 2025, with Tesla moving roughly 1,700 units in the final month of the year. Impact. This supports the bull case that, even in a crowded EV market, Model Y remains a volume anchor in parts of Europe. That matters because the Model Y carries scale advantages and typically better cost structure than lower volume models. Takeaway. The Europe picture looks mixed across countries, but Model Y leadership in places like Denmark suggests Tesla still wins when pricing, inventory, and incentives are aligned. For investors, the question is whether that demand is sustainable without repeated price actions. Story 6. Elon Musk donated about $100 million in Tesla shares to charity, and investors should understand what that does and does not mean. Context. Executive stock transfers can create noise. The market tends to react most to selling, but donations can still raise questions about future liquidity needs and potential selling pressure down the line. Details. A report says Musk donated about 210,699 Tesla shares worth roughly $100 million. Impact. A donation is not the same as open market selling for personal cash, but it can still increase share float depending on how recipient organizations handle the stock. The larger investor takeaway is to keep an eye on executive share activity and any scheduled sales plans, because Tesla trades heavily on flow and sentiment. Takeaway. Treat this as a governance and supply of shares data point, not a direct fundamental change. Putting it all together, the theme today is pressure on the pure auto growth narrative, with Tesla responding through demand levers like financing while facing tighter global competition and evolving regulation. That's it for Tesla Daily News Podcast for January 4th, 2026. Quick recap. Tesla's 2025 deliveries fell to about 1.64 million, while BYD hit about 2.26 million. Tesla is using targeted incentives like 0% financing in Japan. Europe still shows pockets of Model Y strength, and China's upcoming door handle safety rule could force design changes. For tomorrow, watch for follow-up analyst notes on deliveries, any updated price target changes, and whether more regions roll out new incentives. If you want these Tesla investor-focused breakdowns every day, subscribe to Tesla Daily News Podcast and follow for daily updates.